What is the global liquidity cycle, and why is it an important metric to understand and to keep a track of for gold and silver investors? Use the time codes below to go to that bit straight away. But look, if you're watching live, you get to enjoy every single thing we do here every weekday morning at Good Morning Stackers, your weekdaily live show with me, Joe Main. But first, in the 1 minute of the show, we do the synchronized slurp. That's where you grab a tasty beverage. I grab a tasty beverage. Here's mine. Grab yours. We slurp it audibly. I don't care where you are in the world, what you're doing at the time. It is an honest system. Let's do it in the first, whatever. Let's just do it right now. Here we go. Grab your tasty beverages. Synchronized slurp. 3, 2, 1, go. Let's do the shout outs, then we'll get straight to our topic of the day, the global liquidity cycle. And use the time codes below. As I said, you are watching live on YouTube. We also sometimes stream on Facebook and Twitter as well, or X as well. It's just YouTube today. Lance says, GMS and Guten Tag. Guten Tag, Guten Tag, Herr Lance. Not since yesterday's live. I don't know what you're talking about, but that's okay. GMS. GMS says, Tony Peterson, Mark, Florida, GMS. CT says, GMS, y'all. CT comes from the Lone Star State in Texas. I better put out place cards on this. Don't know what you're talking about, but I love the fact that you talk amongst yourselves. Hello, Miss Tony. Heard anything from Yes. Have we heard anything from Living Adam Man? Living Adam Man, one of our regular live watchers. He's part of the GMS family. We don't know what happened exactly. A bad accident or something. He just wasn't in good spirits yesterday. Any news from Lance? Is he not Lance? Living Adam Man. Let's see. Where's all the Aussies? Of course, hit the big red subscribe button to join the family. And of course, if you're watching from anywhere in the world, hit the like button right now because it helps straight away with the algorithm. A couple more shout outs, then we'll get straight to our global liquidity cycle topic of the day. And then, of course, we'll do the usual gold, silver, and platinum and some other stuff, price analysis live. Let's see. I can stand in the back, Tony, if it's too crowded. Love it. Synchronized slurp. You got to love it. Morning all. Hi, Tony. Thanks for the Una bars. GMS, everyone. Watching you from Bali. You son of a gun. Although I must say, I did catch a lot of you when I did that live stream a few weeks ago from Singapore, from the poolside in Singapore at a Singapore hotel. That was pretty cool. So yeah, I know what the feeling's like. Ray M, good to see that you're getting some well-needed rest and recreation. Greg C, GMS. That means Good Morning Stackers, by the way. Bali, lucky you. All right, my people. Let's talk about what is the global liquidity cycle and why is it an important metric to understand first and then keep a track of. Or if you don't want to keep a track of it yourself, you follow somebody like me, hit the big red subscribe button, or anyone else out there who does track and have a look at the global liquidity cycle and who will keep you updated down the track. So that's the easy way. Don't want to do it yourself? Hit the big red subscribe button to join the GMS family. But let's look at it. What is it? We'll do a quick, brief explanation, why it might be interesting to track, and we'll see, does it actually correlate with, gold and silver going up and down, okay, and other assets too. So let's take a quick look. I just found a quick article. This was a pretty good explainer. I'm pretty sure this article, and I'll share the screen right here. Let's go. Now, I've got my great big dirty head there. So actually what I'm going to do, give me 1 minute. And what I will do, I'll close out of that. And 1 minute, I'm going to move that. Actually, go like that. I'm going to go like this. Ready? You can't see what I'm doing here, but that's okay. I'm going to do that and that. Does that move it together? No, it doesn't. I'm going to move that, and I'm going to move that out of the way. Now, you can see it. There we go, people. I'm out of the way, and this is understanding global liquidity cycles and their impact on the financial markets and the economy. This is a LinkedIn article. I'm pretty sure this person probably did just, like a Grok or a ChatGPT, write me an article on what the global liquidity cycle is. But, I probably would have done the same thing. So you've got this chart up here. So number one, this is the global liquidity cycle. I also have a better version or a more slightly updated version right here as well. We'll come back to that. But this is what it is, and let's talk about what it actually is. Okay, global liquidity cycles refer to the ebb and flow of capital availability across world financial systems. These cycles are driven by central bank policies, investor sentiment, and economic conditions, and they significantly influence financial markets and economic activity. Understanding these cycles is blah, blah, blah. So that's kind of like your ChatGPT introduction. But what is a global liquidity cycle? And we'll break it down into simpler parts to, so a 5-year-old maybe, or, a 20-year-old can understand. A global liquidity cycle is the periodic expansion and contraction of global financial liquidity, and essentially the ease with which money, now we will call it currency. We don't call it money because real money is gold and silver, and as we know, so we call what the normies call money, we call it currency. So let's call it currency. Essentially, the ease with which currency can flow through the financial system. When liquidity is abundant, meaning when there are periods of liquidity expansion, borrowing costs are low, obviously because interest rates are going down. So it costs less to borrow money, meaning interest rates are lower, and credit is easily accessible, meaning banks are giving out more loans to more people, leading to economic expansion and rising asset prices. Conversely, when liquidity tightens, borrowing becomes more expensive, i.e. interest rates are going up, credit is harder to come by, banks aren't giving out as many loans, or they're tighter with their lending requirements, economic growth slows, and asset prices often decline. Okay, so this is the global liquidity cycle right here. We'll go into the steps of a global liquidity cycle. This is it right here. This is the most, as far as I can see, the most updated version. This is from this person's name, Andrew Johnson. Don't know who they are, but they're referencing someone. They're referencing cross-border capital. I don't know them, have nothing to do with them. I just found this article, this image on X. Okay, let me get really want to get my head out the way there as well, because you want to see that last bit too. So let me put me down in the bottom right hand corner. Yep, perfect. Global liquidity cycle. When this is at its lowest, this is on the left hand side down here. So when it's down here, bottom left, people look down here, bottom left, that means that liquidity, the global liquidity cycle is in contraction phase. That means interest rates are higher. Okay, borrowing, banks aren't lending out as much money, so that's when you go through, that's when the liquidity is tight, the liquidity is lower, okay? And then as this rises and rises, you're seeing global liquidity increase, it's expanding, and that's because of interest rates going lower, meaning borrowing is cheaper, meaning banks are lending out to more people, and you see the global liquidity go up, and it always peaks at some point, and it's an oscillator, it always troughs at some point. It goes up and down. So what they are saying is that the global liquidity cycle, or assets, follow, not exactly, but tend to follow the expansion and contraction of global liquidity. So for example, the claim would be made, and we can test this against the price, and I'm going to do this live actually, see whether it actually does correlate to some degree for certain assets like gold. I'll probably do Bitcoin as well, out of interest. So what their claim would be is that as this is going up, you're going to see a correlation in the rise of asset prices such as gold and such as Bitcoin from a certain point. Okay, so up, down, up, down, up, down. So we had global expansion. This isn't going to be exact, but this is like sort of like the late 70s. Okay, late 70s, and then it started to go down. It peaked again, had a little bit of a dead cat bounce. So a peak, down, and then a dead cat bounce, or a peak again in about 1980. We'll check what gold was doing in 1980. And then a contraction, okay? And then in the 80s, we had a big period of large global liquidity where in 1985 roughly, it did dip, but you can see here that it didn't dip anywhere down to kind of roughly the normal 20 level that it would. It dipped to around about 45, and then we had looks like a double top as such, okay? And that's in around about, 1987. What happened in 1987? We'll take a look at all that stuff. And then a huge big dip, blah, blah, blah. Next peak global liquidity cycle, 1995 roughly, a little bit of a dip, and then around about late 90s, very early 2000s, what was going on there in the world in terms of asset prices. And then here in 2003, here in 2000 and a little bit after 2008. Okay, we know what was going on there. That's an interesting one that we would need to talk about. And then just recently, you've got this one here, the top, and that's after 2020. It's around about 2020, 2021-ish, where we've had the most recent apparent peak in the global liquidity cycle. And then since about 2021, roughly, we've been moving down, a bit of a dead cat bounce right there, and then all the way down to around about 2023. Pardon me, this is how you know it's live. 2023, where it seems like, it's hit a very, very low point, and it looks like right now we are ticking back up again. We're around about the 35 level on this particular index, okay? This index goes from 0 to 100. You can see that the average is somewhere between roughly 20, and I would call the average peak, let's call it, I think 70 would be about right. So a 50-point index range between roughly the averages of 20 to 70 up there. Sometimes it can definitely peak when there's very much something that you couldn't see coming, like a black swan. Obviously, this is the COVID. COVID happened here, and then money printer went, currency printer, and then we had that big peak. So that is the global liquidity cycle in a chart. Let's go back and see, how does it work? Global liquidity is primarily influenced by banks, central banks, particularly those in major economies like the US, yes, and European, yep. Bank of Japan too, yes. These institutions manage liquidity, manage the flow of currency through monetary policy tools such as interest rates and quantitative easing. Quantitative easing, or QE, is a fancy word of saying money printer go, currency printer go. They just inject just money from inject currency digitally. They just input. We're just going to put $100 billion new dollars into the economy. Do they have to do something to do that? Yes, apparently you're buying bonds and you're swapping this. It's all just a fancy smokescreen for typing in a bunch of numbers on a computer. That's really all it is. So they're just injecting fiat currency backed by nothing, into the system. Okay, so let's look at the phases. So first there's the expansion phase, and this is that what you would call that the expansion phase right there. Expansion going up. Okay, excuse me. Central banks lower interest rates, okay, and engage in quantitative easing, currency printing, to inject money into the economy, making it cheaper to borrow and invest. This phase typically follows economic downturns or financial crises. Okay, so does that track? Okay, so we had, there you go. There's what happened in 2008, the global financial crisis, right? And then blah, 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 and then global financial crisis 2008, a massive injection of lower interest rates and a massive injection of new currency into the system. So you saw the global liquidity index rise, and that was up until about the peak of it was about 2000, and this isn't exactly, it's kind of late 2009, not too long before 2010. So that's an expansion. Also, here's an expansion. What happened here? Obviously the pandemic, and everyone went, black swan event, financial crisis, the world's going to hell in a handbasket. We don't know what's going to happen. We better inject blah, 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 a whole bunch of money, lower interest rates, all that stuff. They were pretty low before then, but lower interest rates, and up we go. So that's the expansion phase. Peak liquidity. As economic conditions improve, liquidity reaches its peak. Asset prices, including stocks, real estate, and commodities often, not always, often hit record highs during this period. We'll come back and have a look at that. Contraction phase, to prevent the economy from overheating and to control inflation. Control inflation, all right. Central banks start to raise interest rates. What have we been seeing recently? And remove liquidity by reducing their asset purchases or selling assets. This phase can be gradual or rapid depending on the economic conditions. Contraction phase, COVID, blah, 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 COVID, 2020, oh no, we need a bit more of an injection. And okay, it looks things are starting to chill out now. The pandemic's kind of over. All right, we better ease it out now, people. Let's start raising interest rates. Not letting people borrow as much, not giving out, not lending as much, blah, 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 blah. And then it gets to a bottom. Okay, excuse me. And finally, the trough. Liquidity reaches its lowest point as central banks continue to tighten policies. We're certainly seeing that. Okay, we have been seeing that. Economic growth slows and asset prices may decline sharply. Well, that's interesting in terms of gold, though. Eventually, we need to take a look at that because we're in the uptick. Eventually, central banks may ease policies again. So this is the big one. Eventually, central banks may ease policies again to stimulate growth, starting a new cycle. Okay? So impact on financial markets and the economy. Global liquidity cycles have profound impacts on financial markets and the broader economy. Stock markets, during liquidity expansion, during that, blah, 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 blah. Stock markets typically rally due to lower borrowing costs, increased investment. Conversely, during contraction, stock markets often face volatility and declines as financing becomes more expensive, blah, blah, blah. Bond markets, expansion phase. Real estate, lower interest rates during liquidity expansion make mortgages more affordable. Yes, boosting real estate prices. Yes. As it contracts, higher borrowing costs, higher interest rates can lead to the cooling of the housing market. We've seen higher interest rates recently, and that has been seeing a lowering, at least in Australia, of the pricing of houses. Yeah, it's gone down a bit. Economic growth, abundant liquidity, so lots of currency being printed, supports economic growth by facilitating consumer spending. When liquidity tightens, economic activity slows, and the risk of recession increases. Now, this is interesting. Current stage of the global liquidity cycle. Let's talk about that. Current stage. We're right about here at that 35 level. So we have obviously gone through that expansion during COVID, and then we've had a full cycle take place, and we've already been, according to these estimates, okay? It doesn't mean everything, it doesn't mean it's all real, but according to these, we've been in the trough already, and this would have been the good time if you had been following it, if I had been following it, which I actually wasn't. If I had been following the global liquidity cycle, I'd heard about it, but I wasn't really following it. If I had been following it and seen it was down here at under this 20 level, gee, that's very interesting for the price of precious metals, also the price of Bitcoin as well. A lot of people argue that Bitcoin is basically exactly correlated to the global liquidity cycle, and in fact, whoever created Bitcoin did it on purpose to match the global liquidity cycle. Okay, we'll take a look at that if we get a chance. But we're currently, looks like we're in the expansion phase, and I would say we've got at least, if we say that the average here is, average bottom is at 20, the average top, although you can spike definitely, average top is at 70, and we're at 35 right now. You've probably got, at bare minimum, a doubling of the global liquidity expanding, right? You've got a doubling of the global liquidity. What could that do to the price of gold, the price of Bitcoin, price of other assets coming up? No, it's not going to go up and down exactly and all that, but just let's have a look. Let's think about it. So as of mid-2024, we're witnessing a transition from expansionary phase to mid-2024? That's not true. Following the COVID-19 pandemic, central banks worldwide, this led to a surge in liquidity. However, rising inflation has prompted central banks to shift towards tightening monetary policy, as they have been doing. The Fed has already begun raising interest rates. Yes. What this could mean moving forward. So this is posted in, what was the date of this? This was just June. okay, I don't know if ChatGPT is so correct with that, because look at the trough. We're back, according to this chart, we're back in an expansion phase. So we're at the bottom of an expansion phase, but we've been at the bottom. This was again like probably mid to late 2023 was when we hit that trough. So I would disagree with ChatGPT, and this could have been just a very quick copy and paste and without reading it too close. I disagree that we're witnessing a transition from expansionary towards contractionary, because no, we've already been in that contractionary. But what could this mean moving forward? Current titling? Yeah, no, it's not current tightening of global liquidity. It's not a current tightening. So I disagree with that. But in summary, global liquidity cycles are fundamental aspects of the financial blah, 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 blah. Okay, that is the global liquidity cycle. Could ChatGPT be right, and that we're actually not in a new expansion phase? I don't think so. Many people have been calling for a new expansion phase. To give you an example, there's lots here. Look at this. There's many. If I do the top ones right here. By the way, follow me on x.com/Good Morning Stackers, I think it is. Global liquidity is on the rise, for example. Okay. There's the oscillator, and then global liquidity is on the rise. I do agree that global liquidity is on the rise. I don't think it's still in a contractionary phase right there. Evidence for the doubting. Global liquidity works on a cycle, just like Kondratiev waves, credit cycles, or population trends. Some people believe we're about to enter a time of global liquidity again. And again, that's the cross-border chart people. So look, they could be wrong, the cross-border chart people. The cross-border people. Right there. We're on the verge on a global liquidity cycle. This is extremely bullish for Bitcoin, for example. I would say it's bullish for Bitcoin. I would agree with that. I think it's bullish for gold and precious metals too. And where gold goes, silver tends to follow as well. So I just want to track this against the prices to see, is this actually a thing? So let's go back. And I want to go back to this one. Where are we? Let's go right. Okay, extremely bullish for Bitcoin. No, I want to do this one. Where is it? Is that the one? That's the one, I think. Okay, so let's take a look at the top of the peak in global liquidity. So this is around about late 2009, roughly. Let's take a look. Actually, I want to go back and take a look at the 1981. So let's take a look at this at 1983, roughly, and we'll take a look at 1980. Where are we? That one there. Sorry, so I want to take a look at 1977 and this peak here in 1980. So this is gold. I'm going to use gold. Okay, let's go back. This is the monthly time frame, and we'll take it back here. We'll take it back to the yearly time frame. Okay. Any moment now, I think my 3-year-old is about to walk into the thing. Oh, so I'm over here now. Okay, great. Maybe I should keep myself over here from now on. Let's have a look in 1977. Okay, so that's the peak, 1977. But interesting, gold just kept its run. There's the peak in 1980. That does seem to coincide with this. After this contraction, then we had an extra expansion right there. So that does track well with gold at the peak of 1980. We also had a peak in global in gold in 1983, 1984, roughly. That's 1983. That doesn't really track with gold, but it might do so with the SPX. So give me a quick moment. SPX, the blue one. SPX. On the yearly time frame, 1979, 1980. Okay, there's 1980. Well, you can definitely see that move right there in 1980, 1977, not really, but 1980, yes. We've also got, 1987, there's 1983, there's 1987, which was the 87 peak and crash right there. There's the peak again. This is a yearly candle, all right? So 1987, if you all know, was the big apparent stock market crash of 1987, where we peaked here, $383, and we crashed. It was a crash, apparently, all the way down to 250. It's not a huge amount, but that was apparently the 1987 crash. And then the S&P just went blip, blip, continued to go. So I don't know. What do you think? Is it quite correlated? Maybe it's more correlated these days. Let's have a look at it. Is it a little bit more correlated these days? Is this before? Is it before? Say, oh no, that's Nixon in the window right there. So closing the gold window in 1971, and this is when global liquidity really started expanding, of course, because Nixon closed the gold window 1971, which then allowed the Fed to just do whatever the hell they wanted because it wasn't backed by gold anymore. So that's why you're going to see that as the start. Let's pick some other times here. Let's see. A peak here in, well, we can see that peak in 2000, definitely. So that's a correlation. A peak in 2000, late 1999, 2000. That's because of the dot-com bubble, right? The NASDAQ dot-com tech bubble right there. So very much, yeah, you can see that. So right here, for example, this is from about 1996 to 2000, okay? 1995, there you go, 1995, 1996 roughly to 2000. So yes, that definitely correlates. You can very easily see blip, 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 as this is going, where are we? Blip, 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 blip. So that's pretty good. All the way down to early 2000s. And then early 2000s, yes, we saw that contraction. Okay, so that's pretty correlated right there. Okay, and then we saw a move back up in 2004, roughly. Yeah, we saw that move, 2003, 2004. Okay, sure. And then we saw this big trough in 2006. Big trough in 2006. No, that's not really correlating with the prices, but of course we've got here. So I'm not so sure. I don't know. It's an interesting one to watch. We've got to see if there's decent correlation. We'll see. Take a look at COVID, etc. So 2006, and then obviously 2008 happened, and then this is a peak at around about late 2009, 2010. So there's the, as you know, the global financial crisis, where in 2009 we had that big move from 650 all the way up till the end of 2010. So a huge move right there. That looks like it coincides roughly with that move right there. Okay, looks pretty correlated. The next big moves you had 2018. Roughly 2018 was a global liquidity contraction. So let's see, 2018. Okay, there's 2018. Maybe I'll pop on the quarterly. There's 2018. Okay, so we had that move down, and in 2018 there was that contraction of the global liquidity supply that roughly tracks 2018, 2019. And of course we know what happened then. 2018, 2019, of course we had the global financial crisis. 2020, we saw the massive decline, and then, because what happens is you're going to have that massive decline, and then the money printing starts expanding, the global liquidity starts expanding, and then it's a little bit of a lag. So that's when you saw 2020, 2020, 2021, 2022. So around about the start of, it was March, April of 2020 until about October, so late 2021, we saw that massive influx of global liquidity. And you can see it was already moving. And then we had that big move right there. So you can see there is a natural cycle, and then it looks like at around about this point, it really kicked into gear. It could have maybe peaked at around about 70, but then COVID happened right there, and then blip, 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 an influx of capital, influx of global liquidity. And then at the bottom in 2023, now this is interesting in the SPX, for example. So 2023, roughly. 2023, okay, we had a red bit of time there, so yeah, okay, and then we are now, because apparently they're saying we are in an expansion phase, you are seeing an expansion of the SPX. How does that relate to? Well, that does relate there. 2023 is a trough, okay, so right there, 2023, we've been in that trough of global liquidity, and then in gold, you did see this range between 2020, you saw that move, and then 2021, 2022, 2023, and then a recent, it looks like as this has been expanding, this has been going up as well. So I'd like to get your opinions on it. How correlated do you think it is against gold? So obviously where gold goes, silver tends to go as well. I'd like to take a look at Bitcoin and to see if that's a little bit more. Now, I know you guys, I know how you feel about Bitcoin, etc. But I do want to see if it's a little bit more correlated, okay? So we saw in 2021, well, yes, I mean, obviously there, you've got March of 2020, what happened there, then you've got that expansion in the global liquidity index, and that also followed with the pump in Bitcoin as well. You've got 2023, okay, so that started to move, and then as we're moving in this apparent new expansion phase right there, you are seeing that Bitcoin has been going up again. Let's take it back to, because we can only go back to say 2009 really, because that's when Bitcoin started. Global liquidity, let's see, the peak of global, so October 2013, so 2013, 2017, 2021. 2013, 2017, well, there's the 2017 there after we had that contraction. So there's the peak in Bitcoin kind of right there. 2009, yeah, it doesn't really correlate, but Bitcoin was a new thing there. So it's a much more newer asset. And then definitely in that 2021 era at the absolute peak of global liquidity, you can see how definitely it coincides with the Bitcoin price around about there. So it does seem like, I think at least it's a very small sample size, okay? It does seem at least that Bitcoin might be tracking closer to the global liquidity cycle than gold, but I think gold and Bitcoin tend to track close enough to each other. I think they will track close enough to each other, I should say, given Bitcoin's maturity. Tell me what you think. I'm kind of on the fence about this. It is an important metric to watch. Let's go back to here. Tell me what you think. I'd love to get your thoughts on this, and then we'll take a look at gold, silver, and platinum, etc. Tony Pearson says Bitcoin is a Trojan horse. Yeah, it could be. It could be. Yep, absolutely. Absolutely could be. Let's see. Jason Ashworth says 50% of current inflation was caused by corporate price gouging. Yet no one in the mainstream ever talks about that because the government's all bought and paid for by big corporations. Well, I do agree with that. I do agree that government is bought and paid for. Basically, it's, as they call it, regulatory capture. Paid for by big corporations. But 50% of current inflation was caused by corporate price gouging. I don't know about the corporate price gouging, though. I'm not so sure about that. But I do agree with the governments being completely overtaken by big corporations. Tony Pearson says cash ban and bank bail-ins would be a good show topic too. Yes, cash ban. Many people have talked about cash bans, etc. I probably could. It might be a little bit clickbaity, but yeah, I'm happy with clickbaity. That's okay. Our ATMs ran out of $50 notes frequently too. Okay. OCT. Anything about that? Whenever we started. Just quick. That's. Okay. Mark says, perhaps Joe could do a spot on maritime law. Oh, okay. Very unsettling when you understand the particulars. I've learned a bit about that over my time in terms of maritime law and sovereign man stuff. And all that. It was just a coincidence. So just out of interest, yesterday's show, let me put on the thing right here. Yesterday's show, we did almost all the show, then we get into the final comments and questions, etc. And someone asked a question about reporting requirements for when buying gold and silver bullion, etc. Let's see if it happens again right now. As I was saying yesterday, and the live show just got cut off. I have no idea, just my internet. My internet was still on, but I don't know what was going on. It just cut off. The live stream cut off for some reason. First time that I've had an issue with the live stream cutting off like that. And I happened to be talking about, someone was asking, reporting requirements for bullion. We were talking about if you spend under $5,000 per person per day. If you spend under $5,000 per person per day, ID is not required to show, so you can be an anonymous purchaser at your bullion dealer, wherever that is. Okay? That's all I was talking about. And then as I was talking about that, cut off. I'm not going to say, who the hell am I? I've got 604 subscribers. No one's watching me going, push a button. Okay, I don't even think it's an AI program scouring the internet and seeing who's talking live about how to, when you need ID and when you don't need ID. I don't think it was, but it was just interesting. It was a coincidence. I was not telling you how to fly under the ASIC radar. No, I wasn't. I was definitely not doing that. I was simply reporting what the reporting requirements are. Again, you need ID when you spend over $5,000 in a bullion dealer per person per day. And you don't if you're spending under $5,000 per person per day. That's it. So no real comments on this global liquidity cycle thing. I am more surprised. Okay. So I'll probably leave it at that. Here's my final thoughts. There seems to be a correlation. It's not a perfect correlation by any chance. But it does seem like there are points where it seems more so for Bitcoin, but for gold as well, there are points where you can certainly see where as the global liquidity is expanding, there's more currency in circulation, lower interest rates, etc. You can definitely see how gold and other assets, real estate, stocks as well. So they're somewhat correlated. I wouldn't call it perfect by any stretch of the means because nothing's perfect. If it were perfect, we'd all be gajillionaires. Okay, but also emotions come into play as well. But I think it is very important to watch and track the global liquidity cycle against your assets as well, particularly gold. If you're in Bitcoin, that's up to you. I've been in crypto since 2013, got a bit of that, got a bit of this, been stacking precious metals since 2010. So I am in both worlds. So I am definitely now watching and tracking the global liquidity cycle. I will be listening to the other people who are tracking it even closer than I am. I just wait and listen to other people. So I will be your conduit if you like. If you'd like to track it yourself, please do follow other people. Follow as many people as you like. But if you want just one source of information, I will do my best to keep you updated on the global liquidity cycle, where we are within that index, and when it might be a time to go, we're at a pretty peaky for the global liquidity cycle. Where are we with the gold price and the Bitcoin price? Okay, well, they're getting pretty high right now. It might be a time to consider divesting a little bit, for example. So watch me and you'll get a global liquidity cycle update every now and then. I might try and incorporate it, maybe once a month, something like that, into my daily live shows, or every now and then just ask me, hey, what's the global liquidity cycle doing at the moment? Where are we on the index? And I'll do a quick little live search and I'll tell you. Okay, so that's the global liquidity cycle, people. It is an important one to keep an eye out for. So I'm going to do this right now, and I'm going to do this Perth Bullion Exchange, perthbullion.com.au, my preferred brand partner, my preferred bullion dealer that you should be buying from if you are purchasing precious metals, physical precious metals. Their special for this week is the 5-gram Geiger minted gold bar. Right there, weekly special, $10 off. Get free shipping when you mix and match with other items in your shopping cart at perthbullion.com.au. You will get free shipping if you have 20 or more items in your shopping cart. It doesn't have to be 20 of one item. You don't have to buy 20 of these to get free shipping. You could buy one of these and 21 10th-ounce silver coins. As long as you've got 20 or more total in your shopping cart, instant free shipping, Australia-wide, express, sign-on delivery, fully insured. It's never been heard of before in Australia. And of course, no bullion dealer has dared to offer free shipping over certain amounts. And Perth Bullion Exchange stepped up to the plate right there. So you can see a great range, lots of Scots, lots of stuff. Got Trump rounds. They got this, that's lots of Scottsdale stuff. They now have a lot of bit of Perth Mint stuff. Perth Mint 1 ounce kangaroo bars over here. Legendary Warrior series. You've got some of the stuff that you I wouldn't call it collectors, but the more interesting stuff. Okay, but then you've got the staples as well, like your Canadian maples. I have not seen maples. You can hardly see that, but I have not seen Canadian silver maple coins cheaper anywhere else. They are the cheapest as far as I can tell from any major bullion dealer, and I would call Perth Bullion Exchange one of the majors now. They're one of the big bullion dealers. They're doing well. So great, awesome range of gold, silver. Are they doing platinum yet? I don't think so. If I click on platinum, not yet. No platinum, but that's okay. And take a look at their gold too. Now, of course, if you don't want to, and that's okay. If you don't want to, let me put it. Sorry, I've got to put this another way. If you if you don't hold it, you don't own it. I need it in my hands. It's got to be stored in my house. I need to know where it is at all times. Meaning the physical stuff. I need the physical stuff. You got to have it. I've got to have it in reach within 1 hour. Then yeah, just be the physical person, and that's okay, because if you don't hold it, you don't own it. I understand that mentality. However, if you're like many stackers, and of course all the normies out there who are not even thinking about gold, but when they do, are they all going to want to buy this stuff? Not necessarily. Some people, it's just not right for them. So you might want to tell them all about Wealthstack, wealthstack.com. It is an unallocated gold program with the convenience of a debit card, which is coming, and the convenience of a 100% gold-backed token as well. Now, that token is on the blockchain, but this isn't a whole crypto thing, all right? Forget the whole crypto thing, whether you think crypto is a scam and all that sort of stuff. Blockchain is different to crypto, okay? They're not exactly tied together. Many companies out there do have something to do with the blockchain, even though they're not a crypto-based company, okay? So wealthstack.com is a gold company. It's an unallocated gold program. You just happen to get, for the money that you put in, of course, you can spend as minimum of $10 and you can buy gold. So it is real physical gold that's held in storage at Wealthstack's preferred storage partner. Again, they're not legally allowed, because they're talking to this partner at the moment to say, hey, can we mention your name? And they're asking a bunch of questions at the moment. So I think eventually they'll be able to say who it is. I happen to know who it is. I just can't say who it is. But they're one of the big ones. And they're LBMA registered as well. So it's an LBMA registered major gold wholesaler, gold storage facility, vaults all around the world. Okay, they're one of the big ones. Trust me when I tell you, they're one of the big ones. So when you buy gold from Wealthstack via the phone app, Android or iPhone, you just download the app, and I'll show you what the app quickly looks like. Then, of course, if you buy a bunch of gold, Wealthstack go out and buy a bunch of gold from their wholesaler, and it gets stored, and you own it too. It's none of this, Wealthstack owns it, and you have, no, you actually own the gold. It's in your name. Okay, right here, there's the leadership team. I did an interview with David Ski on my channel a week or two ago. Just go back and find that. Go to my channel and type in David Ski, and then you'll see the interview. There's a whole bunch of frequently asked questions right here, but here is the app. Download it on iPhone right here. That's the icon right there, and of course for Android as well, that's the icon. Wealthstack, buy, sell, trade physical gold. Okay, so for us stackers, one of the big things you need to know is how much does it cost? Okay, so if I can buy physical gold for spot plus X amount of percentage, and it depends what that percentage is because it depends on the premium, depends on the size as well. This is a really important thing. It depends on the size. If you want to buy a 1/10 ounce gold coin, if you want to buy a 1 gram gold coin, what's the premium over spot price you're going to be paying? Probably, you're talking double digit, minimum double digit. And probably in your 20% range kind of for 1 gram gold, okay? Because the smaller physical precious metals that you buy, the larger the premium becomes. But with Wealthstack, okay, you can buy a minimum of $10 worth of gold, and it doesn't matter how little you buy, you're only paying, are you ready? Spot plus 1%. Spot plus 1% to buy a minimum of 1 gram of gold. So what do you get in return? Now, you get the WXAU. It's going to be changing names. It's going to be called the WSG token. That's what David Ski told us on the interview a couple of weeks ago. It's going to be called the Wealthstack Gold. It's going to be turned into the WSG token. And 1 WSG equals 1 gram of 999 pure gold, which is real physical gold stored under your name for you. Okay? What grade is the gold? All gold sold by Wealthstack is 99.9% pure, 4 nines gold, all that sort of stuff. Okay, so read the frequently asked questions page on their website. Go to wealthstack.com, go all the way down to the bottom into that kind of footer thing. And at the very bottom on the left-hand side, you'll see the frequently asked questions page. I'm actually going to ask, I think I'm going to request, who the hell am I? But I'm going to suggest, I should say, that they put the frequently asked questions page somewhere up here so it's easier to see. I think that would be a good idea. So download the app. You can also log in and sign up via the desktop app as well. It's a great program. The debit card, it will also be coming. That's coming later on in the year. You will be able to buy silver. You'll be able to buy platinum. That's coming on later on in the year as well. There's no transfer fees. Send to other people through the app, free. So pay with gold through the app, no problem. As long as the other person has a Wealthstack account. No storage fees, etc. It's a great program. I at least want you to go and check it out. Ladies and gentlemen, let's talk about the gold, silver, platinum live price analysis, and then we'll get out of here because I've got things to do, and we'll take some last comments as well. And of course, if you want to send me an email with anything like show and tell, or hey, check out this article, I just saw this, or whatever, send me an email at gmstackers@gmail.com and buy me a coffee /Good Morning Stackers to help support the show. $5. That helps to buy me a coffee and helps to support the show as well. Let's go to that was Wealthstack, and this is, well, that's Bitcoin. We don't want to look at Bitcoin, not right now. We want to look at gold. Here is gold on the daily time frame, priced in US dollars. $2,487. Let's pop on the indicators. Gee, what do you know? I did post on the Gold and Silver Stackers Australia forum, an Australian forum for gold and silver stackers, hence the name, free to join. I post this here every single morning, and this is the little image that I posted right here. See that? I've had that line drawn in, and you've seen it previously if you're a previous subscriber, at 2,470. That was the upper line in the sand. We have seen an exact support at exactly, like pretty much, yeah, technically the low on this index was $2,470.89. So bang on 2,470. Why did I believe that 2,470 would be a key line in the sand that you don't want to cross? Because it was a key Fibonacci level from an old high and an old low. Don't have time to show you. But it also coincides with, as you can see right here, although I would say because of it's a Fibonacci level, that it was a period here where we spiked, but we failed to close above it. Failed to close, spike, failed to close, spike, failed to close, blip, 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 spike, failed to close. Cluster of resistance, so around about there, fail. And that's why I thought definitely 2,470 if we break this uptrend line, which we've done so far. So we're now in the, area for gold. We broke this uptrend line. I did say watch out for support at the line in the sand of 2,470, and we have seen that hit bang on, okay? So while we are in this range right here, it's cool, don't stress. It would be much preferable that we get very quickly above this uptrend line again. I need to see that personally. Let's see, take a look on the weekly time frame. Really what I'd love to see would be a close above, at or above, preferably above the uptrend line this week. That would be a good signal if we close the week above the yellow uptrend line right there. Barring that, I will say, so long as we're above 2,470, we're cool. It's just a little bit of a move, and then maybe we find a bit of consolidation and we head back up again. What I want to see is in this next week or two. So within the next 2 weeks, let's give it that, preferably next week. I need to see it close above this uptrend line. If it spends too much time below this uptrend line right here, below this yellow line, I'm going to say it's too much time, and then much more likely we start heading down. Cool. That's really the basics of what you need to know, but we're okay right now. If I pop in the relative strength index, because as you know, this measures assets going through periods of overvalued and undervalued on a particular time frame, you can see here that we are trending down a little bit, okay, on the relative strength index on the daily time frame. Again, it's just the daily, so keep that in mind. But we're above 2,470, so that's okay for now. If we do break and we close any day now below 2,470, I'm actually going to suggest that this is probably more likely to be taken out. And then we at least probably come down to 2,380. That's why for me, 2,470 here, you really want to hold that, okay? So if we do break 2,470, watch for a very quick move, I would say, down to 2,430, so a $40 move, probably down to there. Again, the more times you test a level, so we had a support test right here, the first support test, which succeeded here back in the 15th of August. Okay, so not too long ago. We've had that first test. The more times you come to test it, though, the more likely it is to be taken out. Of course, we're just spinning in the wind here. You could find an absolute beautiful support level here and onwards and upwards. But really, I just don't want to see 2,470 broken and closed any day below. Yeah, no thank you. What we want to see, as I said, just a couple of days, and then, maybe next week, a few days, and then back up would be lovely. Thank you very much. On the weekly time frame, let's see where we are. Okay. Do you remember I talked about this a while ago, actually? How I talked about how we had gone into extremely overvalued for gold on the weekly time frame. We tracked down, we headed back up, and I said, you've got to watch out for this dotted line. This is the top end of the normal range. Okay, sometimes you can see that's like the dead cat bounce. You go down, find support, come back up, test the top end of the range, but you don't get into extremely overvalued or overbought, and then blop, 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 blop. On the downward side, I would say it's been a while now since we've been anywhere below the halfway point. So it's been a bit of time. So there's the halfway-ish. No, that's not even halfway, because that's 70 and that's 30. So halfway is around about your 45-ish, 40 kind of level. We haven't spent a lot of time in there recently, and we have spent time in extremely overvalued already. Okay. Am I saying gold is tanking from here? No. But I just want you to keep an eye out on that. But on the monthly time frame, here's the thing. On the monthly, though, we are already in extremely overvalued for gold. Okay, so we're in that territory at the moment. We will not stay there forever. Okay, you can spend a few more months in that territory. You could, look, this blue-yellow line right here. This blue-yellow line signifies the end of this year or the start of next year. Okay, so there is December 31st, basically, or January 1st. You can easily spend a good bit of time in extremely overvalued on the monthly time frame. So that's months and months and months. You could really, honestly, yeah, you could come up and peak at around about that level that we've been talking about of that 2,650, the mother of all trend lines right there. What's the mother of all trend lines? If you're new to the show, this is the mother of all trend lines right here. Goes all the way back to 1980 right here. There's the point right there. There's the point in 2011. And then we're coming up to test it soon. Okay, so because we are already an extremely overvalued for gold on the monthly time frame, but now look, this is the quarterly time frame as well. So here's the peak in 2011 where we spent an inordinate amount of time on the quarterly time frame in extremely overbought. What a bull run that was from the early 2000s until 2011. It spent all that time in extremely overbought on the quarterly time frame. Each candle is 3 months. And then the consolidation, we went into extremely overvalued, and then we're back in it now. Okay, this is on the quarterly time frame too. So we're already in extremely overvalued for gold on the quarterly too. Okay, but when we go back to the monthly, you can easily spend. Dang, that was not correct. That's not what I wanted. You can spend a decent amount of time in there. So I think that's why for me, around about, I'm going to say around about here-ish is your, just watch out for it. Okay, you've just got to watch out for there at your 2,650 to 2,670 kind of area. As I said, 2,650, give or take $20 roughly. It just depends on when it hits. If it hits it by the end of this year, you're talking about 2,670. If it hits it in the next month or two, then you're talking about 2,650. Okay, round about there. Just watch that. And I will say, watch out for $3,000. It's a potential by the end of the year, but I'm not saying it's going there at all. But on the back to the daily, yep, just want to stay over that 2,470, and that's all you really need to know for now. That is gold. Let's take a look at silver. Oh, interesting. Okay, silver did close technically below 29 for the day, so we have seen a break of, but a quick little spike down below the back-end business line. So we're around about the back-end business line right now at 29 US dollars. We saw that lovely spike above this downtrend line right here, which set up that move to go back into the back-end business area. Between 29 and 31 is my back-end business line. So long as we remain over there, I'm saying, whew, silver is back in business. We're looking good for a lovely continued run up. Okay, we just had that little consolidation down though, and I did suggest, remember I was talking about how on the 1 hour time frame, do you remember this from a couple of days ago, how I said we'd gone into extremely overvalued for silver on the 1 hour time frame. So therefore you've got to spend a bit of time down in this area right here. We hadn't spent a lot of time down there yet. We've come down to the getting towards undervalued in silver. But technically, we have not yet, and we will eventually, I don't know when, but we will eventually go into extremely undervalued for silver on the 1 hour time frame. It will do it eventually. Does it do it in the next couple of days, or does it do it in 10 years from now? I don't know, but it will do it, okay? It absolutely does. So what I would caution you to watch out for on the silver, because we technically closed yesterday below the back-end business line, you want to watch out for a dead cat bounce here, for like a fake out here. And it's actually around about here where I had this line drawn in. Could this be a fake out because we didn't get into extremely undervalued or oversold for silver? Could this be the blip, 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 blip? And that's when we go in there. Just watch out for that. So that's why we're not out of the woods yet, okay, for silver. We need to hold above this uptrend line right here. That's preferable. If we close below this uptrend line, then I would be watching out for down here to the bottom end of my best buy zone. And as you can see, that is horizontal line, rectangle. Right there, my best buy zone, anywhere between $28, anywhere down to 26 US dollars. I would suggest if this uptrend line is broken, then you will see, very likely, a test of the bottom end of the best buy zone down to 26. You don't want to see it close any lower than 25 US dollars. Okay, so that's where we are. We're kind of like in a, while we're below this 29, we're kind of like in a 50-50 state. So we're in a no man's land. I don't know which way the price, I can't say confidently that we are back in business while we're around that 29 or even below it. Okay, definitely below here, then I'd say, geez, that's looking, 60-70% chance that we see the bottom end taken out. That is silver. And finally, we will look at platinum. Platinum has closed below, but now trend. Yeah, okay. So I'm 50-50 with platinum at the moment. I can not say either way because we're hovering around that $945 area. Look, we are trending up on the relative strength index on the daily time frame. So I say probably lends itself more to a continuation of this uptrend. But while we're at 945, roughly, that is a big line in the sand right there. Slightly indeterminate which way we go. If we crack 945 to the downside, then we are heading down into my best buy zone, or 80-90% chance of the best buy zone of 900 anywhere down to 750. Watch out for these two key levels here though at 840 and 870. And if we do continue the uptrend, which, again, on the relative strength index on the daily time frame, we are trending up. So that's a positive. So if we do continue the uptrend and we crack $980, $985, as I've been saying, that's very positive, and we'd be looking at higher prices from there. That's platinum in a holding pattern at the moment. That's all I've got to tell you. Gold to silver ratio. Still in the holding pattern, no man's land right here. While we're in here, neither gold nor silver is signaling to me that it is going to reign supreme for months and months to come. That's pretty much it. All you do want to take a note of though is we are still in a downtrend on the gold to silver ratio on the daily time frame, which bodes more well for silver to continue to outperform gold. So if we do continue down here on the relative strength index, this ratio number goes down, and that's good for silver holders if you're looking over the long term to swap your silver for gold. If you want silver to continue to outperform gold, you want to see this ratio number go down. As I said, watch out for a support level right about here. Breaking this means absolutely silver head and shoulders above the rest. It is the metal of the moment, and it would continue its move down. What if it breaks this uptrend line right there? That's pretty much all you need to know. I'm going to get out of here, and you've got to get out of here too. That's it, people. Let's do some quick comments and some quick queries. Any questions for me, and then I will go and you will go. Ron Panhard, great to see you on the channel. Will they let you play the gold to silver ratio and swap between the two? If you're asking about Wealthstack, Wealthstack.com, when they eventually do silver as well, then yes, I'm sure they will let you play the gold to silver ratio. I don't know, you wouldn't be able, there'd be the fees in and out. But just remember, if you're playing the gold to silver ratio, when Wealthstack.com eventually do add silver and platinum to their portfolio of what you can buy gold right now for spot plus 1%. And you can sell gold at spot minus 0.5%. Those are the spreads at Wealthstack right now. Again, real physical gold. Then yes, they'd let you play the gold to silver ratio, but the spreads are so cheap that it's worth using Wealthstack. But any bullion dealer, if you want to play the gold to silver ratio over the longer term, just take the hit on the premiums. You're just going to have to. The two businesses that I would suggest to go to do your physical gold and silver ratio swap over the longer term, if you live in Western Australia and you want to do the physical one, you can mail stuff to them as well, so it doesn't really matter where you are in Australia. Of course, I would recommend Perth Bullion Exchange, perthbullion.com.au. Why? Because they buy back metal from you at spot price up to a certain amount per person per day, and then there's lower, but that's just like Bullion Now. Bullion Now on the east coast of Australia are the only company that buy back at spot price. So there's only two companies in Australia that buy back at spot price and up to a certain amount. They've both got their caveats. So those are the two companies I'd be going to if you're looking to do a gold and silver swap or a silver and gold swap, because both of their buyback prices are great, spot price, and also both of their premiums are good. Obviously I'm going to lean towards my brand partner, but I do know that their premiums are they're sometimes cheaper than BN, and then BN is sometimes cheaper than them, so it's around about the same. But I would highly suggest taking a look at least Perth Bullion Exchange. They are the newer kid on the block. They're trying to do everything right by stackers, and they're doing everything right by stackers, in my humble opinion. That was another bit of a plug for them. Karam. Oh, g'day, Karam. Hey, guys, what did I miss? Karam says, I'm going to make a bold gold prediction. It's not going below 2,500 for a really long time. Is that 2,500 Australian? Because currently we're below 2,500 US. So let's get you. I want to get your opinion on that. Yes, Jason, send me a link to an article if I'd like to have a look at something. Yes, send me a link to that. Let's see, people. Any other quick comments and queries, etc., etc. Yeah, there is a bit. Tony Pearson says, global liquidity cycle, drowning in debt. Let's see, people. Final comments and final queries, then I will go. Man, we always run over about an hour here, don't we? Let's see. Yeah, I want to get your Karim. We're below 2,500. Maybe you mean Australian dollars. Let's see. Tony Pearson says, the world is treading water, trying not to drown in debt in the liquidity cycle. Yeah. Karim says, sorry, I mean 2,450. Okay, let's take a look at that. 2,450. It will not go below. You believe it won't go below 2,450 for a very long time. So that is, share the screen, Joe. When you do that, share the screen. 2,450. That is, yeah, okay. That's a fair point. Right there. Now that, out of interest, does match up with this previous little high back here when we made that new all-time high in May of this year. Okay, then we had a spike above, We had that move. Then we had the 2,430 holder support. Then we have had that new all-time high, 2,530. Okay, that's a fair point. That could be a nice little line in the sand right there, actually, at 2,450. Yeah, that's an interesting idea. It might not at all. So, yeah, look, anything could happen. So, yeah, if we break 2,470, which isn't great, you could find that as a decent support level. That's a fair point. Okay, I'm going to keep that in there, just out of interest for you, Karim. And I'm going to call this the Karim line. Karim line, right there. And when I go back, I'll be like, what the hell's that Karim line? And they go, Karim. Okay, Karim thought, okay, fair enough. I'm going to keep that in there for a while. 2,450. You could be absolutely correct, Karim. That's an interesting little level right there. Final comments, final queries, final everything, and then I will get out of here. Ratio. Jason says, Joe, you need to make GMS t-shirts saying, gee, what do you know? Yeah, I should. Merch. I should get merch. Yes. Now, I have thought about this. I would really be copying someone. I'd be really copying someone if I did that. As you guys know very quickly, the Synchronised Slurp is a modification of someone very famous, a famous podcaster who does the simultaneous sip. Okay, I completely stole it from them. It's someone I follow almost every day. Their name's Scott Adams. So I follow someone called Scott Adams. I listen to his daily podcast every day, pretty much. And he does the simultaneous sip. Now, it's a great persuasion tool. So I have stolen that completely. I've stolen it. It wasn't my invention, but I modified it to call it the Synchronized Slurp because I didn't want to call it the same thing, but I actually like the Slurp feature. I think it adds a little extra bit of danger And I like that. There's that little bit of extra danger. The synchronized, you got to, and the fact that we all have to slurp it together at the same time. It's the honor system. I like all that stuff. I think I've improved on it technically. Some people don't like the slurp feature because it's a bit of an ick. I get that, but I like the slurp. But the reason I said that is Scott Adams brought out, he did some mugs as well because, people are having their simultaneous sip. Should I do a synchronized slurp version? Maybe I will. Good thinking. Maybe I will. Oh yes, you did that. Do the copper chart, please. Sorry, Tony, no time to do that. You've got to ask me in the first. You've got to ask me when we go live. As soon as we go live, say to me, Joe, can you do the CU chart today? And then I'll see it, and then I'll get to do it. We're at the end of the show. But you can get it next week if you tell me. Spot price on silver, says Ron Panhard, does not seem to matter so much nowadays. Dealers just bump up the premium if it drops significantly. Yes and no. But yes, it does, but they're doing it for a reason. And they're not just doing it to go, oh, spot's dropped, and I want to make the same amount of money that I'm making beforehand. It's not, and I know you know this, Rod, but I'm just saying for people listening, it's not price gouging. It's literally doing it so they can keep an amount of stock in the place. Because again, if something happens and gold and silver absolutely tank for some reason, you, me, lots of other people like us are going to go, I'm going to try and suck all that up. And if it's at the same premiums as, when prices were higher, the stores would be cleaned out really quickly. And so bullion dealers, in order to keep some stock enough for everyone, so everyone's kind of mostly happy, you need to raise the premiums to do that. Because raising the premiums then puts a dampener on demand, and you want to spread that demand out. So that's why. Yes, I know you know that, but I just wanted to explain that for everyone else who thinks price gouging is a thing. You and I, who I would say a lot of us, not all of us, a lot of us are more center right leaning in terms of our way of thinking, in terms of our ideology politically, etc. We understand that price gouging, it can be a thing, but it's not as large of a thing that everyone says it is, because it's pure supply and demand economics, right? Let's see. Finally, but I don't really mind, as we need to support the bullion dealers. Exactly. Small margins, high overheads. Bullion dealers make a very tiny amount, as you know, Tony, because you sell stuff too. The margins, the profit and the margin, the profit margin is a very small fraction of the premium, which is already very small. So bullion dealers make money by turning over a whole bunch of stock, and they've just got to sell an absolute truckload of it to make even halfway decent money. Okay. Wally asks, is there a cost to swap? Is there a cost to swap? If you're talking about, say, Wealthstack, for example, wealthstack.com, then there would be. There'd have to be a cost. There is always, let me put it this way, Wally. To swap in and out of gold and silver, there is always going to be a cost, because whether it's Wealthstack or whether it's a physical bullion dealer, like a physical store, there's always going to be a cost, because there's admin costs, and businesses need to make money. So yes, there would be a cost to swap. Ron Panner, that's the only reason I can see not to hold physical, to swap between the two to maximize ounces. Yes, it is having a Wealthstack account. Eventually, when they do have silver, which again, by the end of the year, they will be roughly adding silver to the thing. It is. That is a reason not to hold all of your stuff in physical. I think you want some physical, but that would be one of the reasons. So it's a quick, easy swap. You download the app, sell the gold and then buy the silver at the very small spreads, or you still sell the silver and buy the gold at the small spreads. Yeah, for example. But if you want to do it the other way, take all your metal down, or post it to a bullion dealer, post it to Perth Bullion Exchange, post it to BN, etc. Do the swap that way. I know those bullion dealers, they facilitate gold and silver swaps via the post as well. Is there a cost of swapping between gold and silver in unallocated programs? That's the same question you were asking. Yes, there is. Yes, there is. And generally, if it's not a dollar cost, it's a change of the. It's not doing it exactly at the ratio. So, for example, at the time, if the gold to silver ratio was 1 to 50, a bullion dealer in particular, we'll talk about bullion dealers for a second, would, rather than say, oh, you've got to sell to us at spot and then buy to us the other metal at the spot plus the normal premium. I have been witnessed and I have been part of gold to silver swaps of physical bullion where instead they just look at the gold to silver ratio, and if it's exactly, say, 1 to 50, they'll go, well, we're not going to do it 1 to 50, we'll do it at 1 to 45 or 1 to 48 or whatever. There has to be some profit. There has to be some kind of financial incentive for the bullion dealer to spend their time and their energy to do that swap. You don't get nothing for nothing. Does that make sense? Ron Panard says there's usually some kind of fee, but if it's reasonable enough, you can successfully grow your stack by swapping between gold and silver as the price of each allows. Absolutely. Over the long term, if you're looking at the gold to silver ratio on the monthly time frame and you're watching the big moves from, say, 125 to 60 in recent times, what's a few fees? You're basically doubling your ounces of gold. If you had bought silver at 125 and swapped for gold at 1 to 65, roughly, that's basically a doubling of gold in your hands. And yeah, you got to pay some fees. Yeah, of course you do. But you're winning out in the end. Thanks again, Joe. No problem. Danny Lou says, can you have a look at Sun Silver SS1? Yes, I will. I can't do it now. Remind me next week, please. The best way to get your requests in is either via when you jump on the live, tell me straight away, because I do those shout outs at the start of the show, and then I'll see that and then I'll go, and that'll be my reminder. But if I start talking, do this topic, do this to this, and I get to your comments later on, I'm not going to see it, and it's too late now. But yes, I will. Or send me an email to gmstackers@gmail.com and say, hey, for the next show, can I please request that you live look at X asset. I love, she says, Tony Pearson says, go away. What's this? There we go. Tony Pearson says, I love seeing new names comment. Yes, I love it when new names join the live stream. And of course, that means you have to hit the big red subscribe button to join the GMS fam. Hit the like button and let's get out of here. I've got stuff to do and you've got stuff to do. That has been Good Morning Stackers for this week. It's Friday the 23rd of August 2024. Have an amazing week and we'll dance it out as we normally do, people. Let's see what the precious metals do closing the week. You normally get some kind of weekend update, like whether it's a screenshot, whether it's a little post on YouTube, or a lot of the time I'll post on the Gold and Silver Stackers Australia forum as well. So if the price of the metals goes crazy one way or the other, then you'll probably get a weekend update. If it just kind of ho-hums around this level, you won't get a weekend update. Okay, but you never know, you might. That has been Good Morning Stackers.
Good morning, Stackers. Oh yeah, we're feeling fine. Good morning, Stackers. It's podcast time.
Grab a tasty beverage. Let's do that. Synchronized slurp. Now we're 3, 2, 1.
Good morning, oh yeah, we're feeling.
Thanks for watching, people. Stay safe, stay informed. Have a great weekend. Do whatever it is you do. Keep stacking. See you next week.